Hi, in this video, we'll walk you through how ordinary business transactions are recorded in an accounting system using a real-life example of Sina Dagang Sdn Bhd. This is a company where they supply construction material with an annual revenue of around 20 million. They use auto-count accounting software to record their business transactions. They have a small but very efficient team of just 2 accounting personnel. So we pay a visit at their office to seek an understanding to understand how accounting entries are being recorded in real-life businesses. So during the interview, we covered the 2 most important business cycles, which is revenue and receivables and purchase and payables. Towards the end, we also managed to find out the controls in place which are being used to ensure the accounting entries are being recorded correctly. During the walkthrough interview with the accounting personnel, we also requested the flowchart for each of the business cycle. For example, revenue and receivable. We requested the flowchart so that it helps us to understand at each of every stages of the process. From ordering to delivering, from delivering to invoicing, and from invoicing to receipts collections. How each of these stages are being recorded in the accounting softwares. What are the double entries? Now, without further ado, let us go in depth into understanding the first business cycle, revenue and receivables.
Hi everyone, my name is Ronald. I will be covering revenue and receivables part for Sina Dagang Sdn Bhd. There are 5 key components of the sales process. First will be ordering, second delivery, third invoicing, fourth credit notes, the final part will be collection. So we will start with ordering. So what happens when customer actually decided to order? There will be a purchase order document issued. Then the sales order will be credited in the auto count by the customer service. They also need to check the customer details and also the credit status. If a customer has overdue payments or exceeds their credit limit, the system blocks the order automatically. Then orders can be released if they are within certain limits or further approval is obtained. So how the control check works is sales order must have correct pricing and quantities, and new customers for this product will require special approval by the sales director or the finance manager. Secondly will be the delivery. Once approved, a delivery order, or we call it DO, is generated and shared with LF Logistic, a third-party warehouse. So LF handles picking, packing, and delivery. When goods are delivered, the customer signs off the invoice which confirms the receipts. So what's the control check? Delivery goods must match with what is being ordered through in the DO. So the next one will be invoicing. Invoicing is that the system automatically generates 5 copies of the sales invoice. The invoice is dated on the delivery date, and this is when sales revenue is officially recognized. So for control check will be customer must sign on the invoice to confirm the delivery and allow proper sales recording. For the next one would be the credit note. If there's an issue with the damaged good or delivery orders, a trade return note is being issued. Credit notes are then approved and created in the system. Control track approval is needed from logistic before any credit note is issued. So the final part will be the collection. So customers pay by check or bank transfer. Once payments is received, the finance team issue a receipt and records it in the system. So for the control check part, payment must be correctly matched to outstanding invoice. That's all for the revenue and receivables part.
Hi, I'm Casey Ong, and today I'll be talking about purchase and also the payable. And we have a from the ordering to the payment, and which is a 3 segment, which is material, raw material, services, and also capex. So the raw material is actually being approved by the planning team. The services is actually approved by the department head, and also the capex is approved by the financial and also the managing director. and only authorized personnel can only approve the PR, which is the price requisition. And the goods receipt, which is when the goods arrive in the warehouse and the supervisors actually check on them and also sign it off. And regarding the control, it's also a good point of check and balance before they even enter the PO into the system, the purchase order. And as for the invoice receipt, it has a 3 segment where the suppliers actually send in invoices. The account team then performs a 3-way matching, which is a PO, purchase order, DO, delivery order, and then the supplier's invoice. And if everything matches perfectly, it will be recorded as a invoice. And if one of it is not tally, or 2 or 3, be it will be need to be tracing back to where it gone wrong, and otherwise it will not be recorded as an invoice. And moving on to the payment, which is payments are made based on the supplier's credit terms, and there's 2 types of payments: auto payments via bank transfer, usually famous for the major supplies, which is quite famous for the digitally economic, which what we do as a online transfer. And as for the manual payment, which is a check for smaller suppliers, which is still valid, and they still prefer that as if today, as the time gap 2-3 days, that's where it benefits. And all of the payments are actually approved by authorized signatories before release. And if there's no payment without the proper authorization, if there's no proper authorization, then there's no payment. So I'm passing it to Yang, which is reporting and also conclusion. Thank you.
Hi, my name is Yang. We have gone through how ordinary business transactions are recorded in an accounting system using Sina Dagang Sendirian Berhad as an example. From sales and receivables to purchases and payables, every step in the accounting process is carefully structured to ensure accuracy, efficiency, and proper financial control. These processes are crucial for maintaining accurate financial records, managing cash flow effectively, and ensuring compliance with company policies and accounting standards. By using auto-count accounting, Sina Dagang Sendirian Berhad enhances operational efficiency while minimizing errors and risks. Understanding how these transactions are recorded helps us appreciate the importance of internal controls and financial accuracy in any business. Whether you are in finance, management, or operations, having a clear view of how transactions flow through an accounting system is key to making informed decisions. Thank you.
It's after DO.
After DO, yes. Because when the completion successfully delivery order to site, the client only will receive acknowledge our invoice actually. It's not normal If let's say I didn't deliver thing, so it's from.
But can you show us like how you enter like from the beginning? Let's say you say at what stage you will start entering the details into the system?
Actually, this one PO we normally is using the Excel file. We are not.
Oh, Excel.
Excel. This one Excel. Only and this one DO we just will issue under the sales invoice here. Sales depot. We will issue under here as per the PO. Then the customer name, the date, the DO number, which is this one is our reference.